Hello. Oh, there we go. Hello, everyone. I'm Lizette Gabriel, and I work as a librarian in the Business and Economics Department here at the Los Angeles Public Library. Welcome to today's presentation called Credit Builder Workshop. This program is brought to you by the Alliance for Economic Inclusion, and today's presenters are Rihanna Rodriguez, Cheryl Ryman, and Jose Figueroa. Your credit history does not have to be your credit future. You will learn about credit reports, the importance of reviewing your report, and their financial impact. Get answers to these questions and much more. Please send us your questions, and at the end of the presentation, we will have a Q&A session. I'd now like to pass the presentation over to Rihanna.
Hi, everyone. Thank you for joining us. Next slide, please. Myself and Cheryl will take you through the Credit Builder Workshop, and I wanted to go ahead and read a disclaimer. This presentation represents the views of the speaker and not necessarily those of the agencies they represent. This presentation cannot be reproduced or redistributed by a third party or on a third party website without prior authorization. Next slide, please. Next slide. So I will go over credit reports and scores. Next slide. Your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. Understanding your rights helps you know how to protect your credit history. Next slide. So is this in a credit report? We were going to go ahead and provide you with some things that would be on your credit report, such as your name, your credit card payments, any potential bankruptcies, student loan payments, and credit card limits. But your date of birth or your age is not listed on your credit report. Your income is not. Your cell phone plan payments, any debt to income ratio, savings account balances, and debit card purchases are not listed on your credit report. Next slide. So what's listed on a credit report? Effectively, it's any type of identifying information about you and your address or other things that may potentially be considered personal identifiable information. Your debts and closed credit accounts. So any type of debts that you have that are outstanding and or any accounts that you would have closed. So if you had an outstanding credit card with Kohl's, let's say, for example, but you have paid that off and you decided to close the card because you no longer are interested in having that, it would reflect on your credit report as a closed credit account. And any existing debt. So if you had an existing line of credit with Kohl's, that would also be on your credit report. Any potential public information and or applications for new credit and other inquiries. There's a whole section for credit inquiries that would be listed on your credit report, and credit inquiries can stay on your credit report up to 2 years. Next slide, please. There are nationwide credit reporting agencies, and the three major credit reporting agencies are Equifax, Experian, and TransUnion. Next slide. You have a right to the free credit report. You can get one free credit report every 12 months from each nationwide credit reporting agencies, which would include the Equifax, Experian, and TransUnion. You can go to annualcreditreport.com, not the annual or free annual, but annualcreditreport.com. That is the official website to fill out orders for the free credit reports. There's also the telephone listed on the slide at 877-322-8228. When you go on and you take a look at your credit report, you'll also notice that there are other instances in which you can receive a free credit report. Next slide, please. So in those instances, there are additional abilities to get free credit reports. So as of now, there is one free credit report every week from each nationwide credit reporting agency. And the credit reporting agencies are making these reports free available through Don't think that it was April 2021. I do believe that that is something that is ongoing for now. But then also, like I said, there are other instances where you can get free credit reports, which would include if you're denied for credit, if you're denied for employment, you could actually go on to either of the three major reporting credit bureau agencies, and you can request a free credit report in any instance in which you have been denied credit because maybe you've applied for credit and you received a declination letter or a denial letter in the mail. Next slide, please. Also, watch out for imposters. So any type of advertisements that you would see for free credit reports or free credit scores or credit monitoring are not part of the legally mandated free credit report programs. Often the free service converts into ones you actually have to pay for after the trial period ends. So if you're looking for the annualcreditreport.com and you happen to type in free, do note that those particular websites will make you pay for your credit reports or credit scores. So again, just go directly to annualcreditreport.com. Next slide, please. Again, the right to receive additional free credit reports. So if you receive public assistance, you're unemployed and looking for a job, you've been a victim of identity theft or financial fraud, and any type of state law that provides for a credit report, or you're denied for credit services or insurance services. Next slide, please. So do credit reports matter? Yes, they do. It's incredibly important. So I'll walk you through this quick slide. So Yardley, learning about the importance of credit. Yardley was not familiar with credit, and she did not think that credit particularly mattered. And she did not plan to get any type of credit cards or any type of loans because she did use cash for everything. Yardley recently moved and needed to find an apartment. Some landlords would not rent to her because she had no credit history, even if she promised to pay her rent each month in cash. When she found an apartment she liked and was and a willing landlord, she had to pay higher security deposits because she did not have credit history. She also had to pay for any type of deposits for utilities because she did not have credit history. She decided to find out more about credit reports and why having no credit history seemed to create some obstacles and additional costs for her. Again, just to stress, it's incredibly important to understand your credit history and do know whether you have any type of credit history. Because if you're looking for apartments, if you're looking for insurance services, they do pull some form of credit report, and you may end up, such as Yardley, having to pay additional security deposits and or potentially paying higher utilities. And that would include deposits for electricity, deposits for water or gas, or even potentially as you're looking for other types of services, you may end up having to pay a higher deposit for such as cable or maybe even like a DirecTV service. Next slide, please. So credit reporting and your rights. Why is it important to know about your rights in credit reporting? Why? Because you're able to determine if your rights have been violated. Plus, you can take steps to protect your credit history. You can also take steps to improve your credit history and scores. Next slide, please. The Fair Credit Reporting Act is a federal law that provides you with rights related to your credit and other consumer reports. So anyone who uses a credit report to deny your application or offer you less favorable terms for credit, insurance, or employment must tell you that they did so. They must provide you some form of notice. You have the right to dispute any type of incomplete or inaccurate information. And this, again, would be on your credit report. So you want to ensure that you're taking a look at your credit report to determine whether there is incomplete or inaccurate information. And credit and other consumer reporting agencies must correct or delete inaccurate, incomplete, or unverifiable information within 30 days after they've received the dispute. And in these instances, you can actually do the dispute online. It's rather simple. Next slide, please. So again, from section 1, please remember your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. Understanding your rights helps you know how to protect your credit history. Now I'm going to pass it to Cheryl for the remaining part of this workshop.
Well, thank you, Rihanna. And so now we're going to talk about credit scores. And often when we talk about credit reports, people think that credit reports and credit scores are one and the same thing, but they're not quite. Your credit report is the fabric, and the garment is what you make with the fabric. So the credit scores are independent of your, or not, they're not really independent. They're created based on the information in your credit report. So your credit history has everything to do with your credit scores. And if we were in a room together, I'd ask for a show of hands. I don't know if you want to maybe drop in the chat and say yes or no if you've ever looked at your credit report and or at your credit scores. I know there's a lot more availability today than even 10 years ago in access to our credit reports and the resulting credit scores. So there's a lot more visibility and awareness. So if we go on the next slide, you'll see, I think when I first started doing these presentations on credit, I wasn't, even though I feel like I was born and raised in banking, I felt like I was just a passive participant in my credit scores. And that's not necessarily true. You can take steps to improve and manage your credit scores. This includes absolutely paying your bills on time. And as agreed, that is the most important part to having a higher credit score. And we're going to talk a little bit about that. So on the next slide, you'll see that your credit score is a number, and it ranges depending on the credit scoring model. There are different types of credit scores. There's not just one universal credit score. So depending on the credit score model, your range could vary, but the the most common is the FICO score, and that runs from 350 to 850, I believe. So it depends on the credit scoring model. And the better your performance in your credit history and your credit reports, then the higher your number goes. So the credit score is a number that's based on information in your credit reports. And creditors use it as a predictor of your likelihood of making your payments on time, as you have in the past. So people with a better or a higher credit score are likely to present a lower risk than people with lower credit scores. Higher credit scores indicate that you have a history of paying your bills on time as agreed and are likely to do so in the future. The next slide. So why do we care? Who uses credit reports and credit scores? Well, there's a lot of information that can be identified and determined based on information in your credit reports. Your credit report is a summary of your financial reliability. For the most part, your history of paying debts and other bills on time. So as we said, the credit score is a numerical value based on that information, and it assigns a risk value. So you can compare your credit score to your school grades. The higher your grades, the better chances a student has to get into a great higher education school. So here's a list of some companies or organizations that use credit reports, but maybe not always credit scores. They may use the content of the credit report and generate their own scoring model. So financial institutions, of course, use your credit reports and your credit scores to determine whether or not they will extend credit to you, maybe even open a bank account, or offer you a credit card, or give you a loan, whether it's a mortgage loan or a personal loan, a business loan, a car loan. Landlords, more often than not now, landlords also use credit reports and credit scores to determine whether or not they will rent the home to you and or how much of a security deposit they might require. Also, utility companies, so whether we're talking about electric, gas, whatever it might be, may use your credit reports to determine whether or not you need to pay a security deposit and the amount of that deposit. And of course, cell phone companies, they also use your credit reports to determine whether or not you're eligible to make those purchases, right? Whether or not they want to hand over a $2,000 cell phone unless you're paying cash for it. And of course, insurance companies, and this was something that I'd learned, insurance companies. So whether you have car insurance, if you have renters insurance, if you have homeowners insurance, there are a number of different ways that you can be insured. And those insurance companies use information from your credit report to determine how much you will have to pay. And of course, then now employers, again, more often than not, employers use credit reports and the resulting, they don't have access to the credit scores, but it's the content of the credit report that makes the score. So when you're looking for a job, your credit plays a factor more often than not on whether or not you're even eligible for the job. And even if you interviewed really well, and you think you've got it in the bag, if the employer has maybe 3 or 4 applicants that are great, when they look at that credit report, that might be the deciding factor. And then, of course, some state agencies and or affiliated organizations may use credit reports to determine eligibility for professional licenses, such as mortgage loan originators or other different types of licenses required for maybe a profession that you're seeking to enter into. So lots of uses on the credit reports and the resulting credit scores. So on the next slide, we will see what actually, how is that credit score created? So this is just a pie chart of the FICO score, the Fair Isaac Corporation, which is the most universal credit scoring model in use. It's been around for 30 or 40 years. So you'll see the biggest piece of the pie here, the largest factor in determining your credit score is your payment history. And this is really important because no credit is not good credit. In order to build a good credit history and a good credit score, you actually have to use credit. You have to have an active payment history. Now, we're not advocating that anybody go into debt, but if you have access to credit, and this was certainly something that I learned, if you have access to credit, but you don't use it, you don't have a positive payment history. So you will still have a credit score. It just won't be the highest credit score. So generally what we recommend is if you have a credit card, periodically use it, but pay it off. Pay off the balance every time, every month. Let that statement come in the mail with a balance, with your due date. Pay that balance in full before the due date and continue doing that. So for me, it was using a credit card to buy gas. I have to put gas in my car anyway, right? So instead of using my debit card, I started using my credit card. And when that statement came every month, I paid it in full. And then I would use it again. Just one tank of gas. You don't have to use it all of the time, but at least once a month, get that statement and then pay it in full. Now you're having a positive payment history. Although to maximize your payment, your credit score, and I think we're going to talk about that in a minute, to maximize your credit score, you'll actually want 3 active lines of credit, but we'll get to that in just a moment. So you'll see here on the next piece of the pie in the orange are the amounts owed, which really is not so much purely the amount of money that you owe. It really should be the utilization ratio. So how much do you owe as a percentage of your credit limit. And the ideal is to keep your balances below 30% of your limits. And that's across the board. So if you have 5 credit cards, you can use only one of them. And it considers, when they're talking about that utilization ratio, it's taking all of your available balance, all of your credit limits, and then determining what your available balance is and what that ratio is. So collectively, you want to keep your balances 30% or less than the credit limit amounts. So that's your amounts owed. Then you'll see the length of your credit history, that green. That's 15% of your credit score. And that's when you're looking at, are you new to credit? Are you maybe young and you haven't established credit yet? Or even if you are a little older, are you still new to credit? Because there are a lot of people who are credit adverse. They don't want to be in debt, so they haven't taken advantage of using credit and building that positive payment history. So the length of your credit history does affect your credit score. Do you have accounts that have been opened for years? And this is where it comes into play when we get questions about closing accounts, whether or not somebody should close an account that they've had for a long time, but maybe they don't use it anymore. Well, hold on, don't close that account, because if that's one of the accounts that you've had for a long time, remember, length of your credit history is a factor to your credit score. So what you might want to do is periodically use that, maybe at least once a year, to keep it active. Because oftentimes if you don't use credit for a while, the creditor will close the account themselves. So your length of credit history. And then next you'll see in the yellow, 10% of your credit score is comprised of the type of credit that you have. So do you have a mortgage? Do you have a car payment? Do you have universal credit cards, MasterCard, Visa, Discover, American Express? Or do you have retail stores? Do you have Macy's? Do you have Target? Do you have Home Depot, Pep Boys? The type of credit. Do you have student loans? The different type of credit, and having a mix of credit affects your credit score. And then, of course, if you're new to credit, you probably have some credit inquiries, right? Some inquiries on there that will affect your credit score. And like Rihanna said, those credit inquiries, when you apply for new credit, those stay on your credit report for 2 years. But the older it gets, the less impact it has on your credit score. Next slide. So what is a good credit score? And this is just an example. This is not universal. Every creditor has their own standards. They have their own tiers. Maybe they have 3 levels. Maybe they have 10 levels of grades. Every creditor has their own standards. But generally speaking, okay, like I mentioned, the FICO scores range from 300 to 850. And FICO provided this chart just to kind of estimate how those ranges might play. So poor, maybe you don't have credit. Somebody who doesn't have credit or has a lot of delinquencies, late payments, maybe collections, foreclosures, repossessions, their credit score is going to be lower, maybe in the 300 to the 579 range. Then you get into the 580 to 699, not so bad, but not great. Now you get into the mainstream, 670 to 739. You're generally going to get approved for credit reasonably, and you'll probably have mainstream conditions. So you might get the standard rates and terms. Now, when the higher your credit score, the better deals you're going to get, and the less you're going to end up paying. So if you have a credit score of 740 or more, then you're doing very good. You're doing really good. And you can generally rely on the fact that if you apply for credit, you will be approved. And then exceptional is if you've got credit score over 800. Now, I don't know if any of you remember the Sunday morning TV commercials, go see Cal or whatever it might be, and or the ads in the newspapers if you're looking for a car, and the car advertisements that say 0% down and 0% interest on approved credit, on approved credit. So those are the people who have the exceptional credit histories and the resulting exceptional credit scores. Those are the ones that get the absolute best deals when it comes to credit. Okay, so you can see how that absolutely affects how much you pay for something and whether or not you can even get it. We were having a conversation earlier about mortgage lending and the difficulty in getting approved for a mortgage if your credit score is less than 620. Good luck. And if you do, then you're probably going to pay a higher rate, which is going to affect your monthly payment. It will be higher. The lower your credit score, the higher your payment, the higher your rate of interest will be. And the same is true for buying a car. Okay, so you can see how that has an actual monetary value, your credit reports and your credit scores have. Okay, on the next slide. So when we talk about having no credit reports and no credit scores, remember Yardley that Rihanna was talking about in section 1? She was credit invisible and had a hard time renting an apartment. This is true. Like I mentioned, across the board, it may mean that you have a harder time getting approved for a credit card or a loan, renting the apartment, getting a favorable cell phone plan, the jobs, right? The jobs, it can absolutely affect your ability to get the job. And then turning on utilities without having to pay a large deposit. Because trust me, moving is expensive enough, just that act alone. Okay, then on the next slide, this is the key takeaway for this section, section 2, you can take steps to improve and manage your credit scores. This includes paying your bills on time and as agreed. So now on the next slide, you'll see that in section 3 here, we're going to talk about building, repairing, and maintaining a productive credit history. And I love this next slide. The key takeaway for this section is your credit history does not have to be your credit future. One of the things that we didn't talk about in this presentation, and I think it is important just to note that your credit history can change. Your credit report can change every month as new information gets reported. So the old information ages out. Typically after 7 years, if you have late payments on your credit report that are negatively impacting your score, the older those items get, the less negative effect they have on your credit score. So it's the most recent information that's reported on your credit report that carries the most weight. So your credit history does not have to be your credit future. So while, if you're concerned that your credit history is bad, if you haven't looked at it in a while, it may not be as bad as you think. So on the next slide, you'll see we're going to talk about what is a productive credit history. It means having a credit history that helps you do the things that you want to do without having to pay more to do it, right? Get that car, buy the house, qualify for an apartment, get the job, all of those things. On the next slide. Now, it's really a challenge, and I can sympathize. I've got 3 grown daughters and trying to help them build their credit from the beginning, and me trying to rebuild my credit after, youthful impulses, when I was younger. One way to build your credit, applying for credit when you don't have credit, you're likely to get denied. What you can do is get a secured credit card. And a secured credit card is where you make a deposit, say $500, $1,000, and the credit card issuer holds that money as security and issues the credit card for the same amount. So you deposit $1,000, they give you $1,000 credit card limit. You use that credit card responsibly, right? You use it and you pay it off. You use it, you pay it off. You use it, you pay it off. And after a period of time, generally 12 months, but each issuer has their own standards, then they'll release your security deposit back to you, but allow you to keep using and keeping the credit card. So starting by building your credit with a secured credit card. There are some loans that are also like that. I think generally when I've heard of those, they were issued by credit unions, but it's the same type of thing. You make a deposit and then you take a loan against that. The bank holds that as collateral, as security, until you pay off the loan. Meanwhile, that's getting reported every month to the credit bureaus and hopefully building your credit score. Then the next note here is to become an authorized user on an account, but be careful. Not all authorized users are reported to the credit bureaus. So if you are doing this for someone or someone is doing it for you, you will want to make sure with the creditor, whoever's issuing the credit card, that they do report that to the credit bureaus. Otherwise, it might not be doing any good. Okay. Some creditors will not report authorized users. They'll require you to actually be a non-revocable joint account holder. But that varies by creditor. Then, of course, the credit card at a store or a gas station. Now, some of those might be a little more lenient in their underwriting and more likely to approve a credit card because you can only use that credit card at their stores, right? So whether that's, a Target or whether that's a mobile credit card, you can only use those credit cards at those stores rather than a MasterCard or a Visa that you can use almost anywhere. So those might be easier to apply for and get approved. Then, of course, if you're looking to purchase, say, for example, a car, and your credit maybe isn't that great, so you want to improve your chances of getting approved for that car loan, it would be to come up with a larger down payment. If you can provide a larger down payment, you're less at risk of not finishing paying that off, right? You've got a lot of money into it already. You're going to work harder to pay that off rather than just let it go. So if you can afford to make a larger down payment, and then you can negotiate for a loan for the remaining balance. Okay. On the next slide, then we're talking about maintaining credit. Okay, so you're on a roll. You've got some credit. You've got some credit cards opened. You've got your car loan. You've got hopefully a home mortgage. Now maintaining your credit, because that once you get it, you got to keep it up, right? So it's really important. The most important part of building your credit history and your resulting credit score, pay on time. Pay on time, pay on time, pay on time. We can't enforce that enough. Doing this will have the greatest impact on both your credit report and your credit scores. It is the most important strategy for maintaining a productive credit history. On the flip side of that, if you don't pay on time, that's immediately going to negatively impact your credit report. And remember, that payment history stays on your credit report for 7 years. Okay, so even 1 or 2 late payments, and we're talking at least 30 days late. Not that your payment was due on the 12th and you didn't make it till the 14th. They're still going to charge you a late fee, but that's not going to show up on your credit report. So at least 30 days late on your credit report That's going to show for 7 years. So if you recognize that you might have challenges in making your payments on time, call your creditors, because what they might do is give you an extension. And if they give you an extension, and that's much more common now, of course, following COVID, if they give you an extension, let's say they say, okay, your minimum payment amount is $130. And you're like, I can't, I can do $30. And they say, okay, then you're not late. You're not late. You're not delinquent, because you have a new agreement as long as you pay it according to that new agreement. Okay. Now, what they might do, if it's a credit card, they might block you from being able to use that until you get caught up. But at least it's not having a negative effect on your credit report and your credit score. Okay. Then, as best you can, continue to pay down your debt, right? Keep those balances as low as you possibly can. I know when I first pulled my credit reports, all 3 of them, we're talking 15 plus years ago when we started doing these, it was overwhelming to me. I thought they were complicated. They're not a lot better now, but it can be a little overwhelming when you look at your credit reports. I had to print them. I had to get out a ruler. I got 3 different color highlighters, and I had to put it into a spreadsheet. And then I was able to better visually identify what my strategy would be to pay off my debt. Did I want to pay down the higher balances first or pay off the higher interest rates? And there's no one size fits all here. It really depends on you and your circumstances. And if you need help with things like that, working with a qualified credit counselor is absolutely recommended. Just make sure that they're a HUD certified credit counselor, not one of these 800 numbers that you see that they want to charge you $3,000 to fix your credit, because those are usually scammers and they're there to take advantage of you. So get your credit reports, take a look at them, identify what you owe and who you owe, and keep chipping away at it. Keep the amount of credit that you use low compared to your credit limits. Remember, to maximize your credit score, you want to keep your balances less than 30% of what your limits are. Don't apply for too much credit, right? You think, oh, I got approved. Let's go get another credit card. Let's get another credit card. Well, it's kind of a red flag. Lenders are then concerned that even if you don't have balances yet, what is the concern if you do go out and maximize all of those credit cards? Okay. So applying for a lot of credit at once can suggest financial concerns. They may not view that favorably. Plus, remember, if you apply for credit, you're going to have those credit inquiries, which are going to affect your credit score. Absolutely check your credit reports at least once every 12 months at annualcreditreport.com. I know we had an old date on the slide earlier about how often you can access your credit reports once a week, and it's still right now through the end of December of this year. And that was instituted. Usually you can only get it once every 12 months. So if you pull it in July, you pull your Experian in July, then the following July, you can pull it again or thereafter. Right now it's weekly because of all of the concessions and the alternative payment arrangements that were made during COVID. Okay. And then when you look at your credit report, not if, because we're challenging you, if you haven't looked at them, to look at them. Dispute errors. There was a report by the Federal Trade Commission to Congress, and the Federal Trade Commission is the one who enforces the Fair Credit Reporting Act that Rihanna mentioned earlier. They govern the credit bureaus. We're regulated by the Federal Reserve Bank. The FTC regulates Experian, Equifax, and TransUnion. If you find errors in your credit reports, 1 out of 5, that survey found, that research found, 1 out of 5 credit reports had a significant error that adversely affected the consumer. So consumers were out there applying for credit and either being denied or were given adverse terms and conditions, which means instead of paying 0% or only 3% or only 7%, they were paying 12, 19, even 23% interest, which means that they're paying a lot more than was necessary because there were errors on their credit reports that they didn't even know existed. They had no idea. So that's why this annualcreditreport.com came into play. Was the Federal Trade Commission mandated that consumers be able to access their credit reports, understanding how important they are to our lives. So I absolutely challenge you, if you haven't looked at your credit reports lately, please do so. And understand that if you find an error on your credit report, to dispute it. When you go into the website, when you're in it, and you can log back in, I think within 30 days. Well, now you can go in every week, but if you find an error on your credit report or something that you don't recognize, you can file a dispute right there online, or when you access your credit report, at the end of all of the other information, there's going to be, I don't know, 3, 4, 5 pages of additional information, including how to dispute errors by phone, by mail. Take advantage of that. If there's something on your credit report that's not correct, get it fixed, okay? Because you don't want to have to pay for that in your ability to access credit. And then, of course, keep good financial records. It's really important that if, something, again, dispute an error. So somebody says that you were 30, 60, 90, or 120 plus days late making a payment, but you have a copy of your canceled check. And you're like, no, I made my payment on time. You need to correct that. So keep your own records also, right? So you can take care of that. Also, in the event, some of the disputes, one of the biggest issues that the Federal Trade Commission found was identity theft. People were not even aware that they were victims of identity theft until they had trouble accessing credit and looked at their credit reports. So information, if you've been a victim of identity theft, take notes. Take lots and lots of notes of who you spoke to, when you spoke to them, and what was said. And because it's a bit of work to recover from identity theft, okay? But make sure that you contact your creditors if you suspect you've been a victim of identity theft, okay? On the next slide, so we talked about getting help. Credit is a bit overwhelming. I absolutely wholeheartedly believe that, but you can get help. Your financial institution is happy to answer questions if they can. The nonprofit consumer credit counseling, I mentioned the HUD certified credit counselors. There are a number of nonprofit, maybe family resource centers that can guide you to reliable sources of information, and certified financial planners, okay? On the next page, I alluded to credit repair scams, right? Those 1-800 numbers, call us, will help you fix your credit. Be careful, to really be careful. They will promise to erase your bad credit, remove negative but accurate information. If it's accurate, it might come off momentarily during the course of the dispute, but once it's been validated, it'll go right back on, okay? Credit repair scams promise fast and easy. If you have bad credit, it will take some time to legitimately repair your credit, right? Your credit history doesn't have to be your credit future, but it does take a little bit of time. If somebody offers to create a new identity for you, clearly that's not a good thing. Stay away from them. Okay. And if they want you to pay upfront, it's illegal actually for a credit repair agency to require upfront payment. Okay. And oftentimes they will not tell you what your rights are and what you can do for yourself, because there's nothing that you can pay a credit repair agency to do for you that you can't do for yourself, just with the knowledge and with the time to do it. Okay. So you can protect your credit history and your credit reports by placing alerts, which is kind of locking the door to access. So if you've been a victim of fraud or you're concerned, you could have an initial fraud alert placed on your credit report. Now, what that means, though, is that if you apply for credit, they're not going to be able to access that. There's going to be some challenges. They're going to have to do some extra validation of your identity. Also, if you're a victim or if you're an active duty military person, you can place an alert on your credit report. You can do an extended fraud alert and then a credit freeze. A credit freeze is like the vault door, right? That means that if you want access to your credit report or to apply for credit, you have to request that the credit bureau unlocks that and allows the agency's access to it. Okay, similar to the credit lock. So then on the next slide, you'll see the takeaway. Your credit history. One more, sorry. There we go. Your credit history does not have to be your credit future. Your credit report changes every month as new information gets reported, or if you have no credit, then that doesn't change. But if there's any change in information, each time you get a statement from your credit card company, if your car payment is reported, each time that you have a payment on that, then they generate a statement. That information gets reported new to the credit bureaus. So it can change every month. And while it might take some time to build a higher credit score, it's not impossible. It just takes patience. So on the next slide, you'll see a couple of websites. I mentioned the Federal Trade Commission, that's ftc.gov. They really are from the government, and they really are here to help. They're one of my absolute favorites for consumer resources. And then we have the CFPB, the consumerfinance.gov, and of course the annualcreditreport.com, which is your source for free access to your credit reports. Okay, and then on the next slide, we challenge you to make a commitment to yourself to take action, such as pull your credit reports. And if there are any errors or things that you don't recognize, to dispute that. And then oftentimes, of course, we feel a little more compelled to achieve our goals when we share those with someone else. So please, if you need assistance with your credit reports, to get qualified, reliable help to help you plan, build, or improve your credit report. And with that, I will turn it over to Jose.
Cheryl, thank you. Can you guys hear me? Yes? Okay, sounds good. Well, good afternoon, everyone. As a member of the Alliance for Economic Inclusion, we're here to present, as Cheryl said, in building good credit, right? It goes a long way in really developing good savings behaviors, right? So we're going to be talking about the LA Saves. Start small, think big, set a goal, make a plan, start saving. So next slide, Lizette. So America Saves and LA Saves, it's a local campaign. Basically it's a campaign managed by the Nonprofit Consumer Federation of America. And basically this local campaign, LA Saves, it seeks to motivate, encourage, and support low to moderate households to save, reduce debt, and build wealth. So the research-based campaign uses the principles of behavior economics and social marketing to change the behavior, that way we save money. Because 70% of the population here in LA County don't have a savings account. So our goal today is to really change the mindset, the way we save money, right? Because building good credit, like I said, it works along with the way we save money for the future. So the next slide, please. So why save money? Save money is important, right? For emergencies, save for opportunities. So one of the things that I really wanted to talk to you guys about today is that I want to challenge each of you guys to really take the LA Saves. It's a page, lasaves.org. It's basically you take a promise to save money. And basically, when you take the promise, you make your own commitment to save money. All right. Next slide, please. So save by reducing debt. So one of the things that it was very impressive to me was when Cheryl said building credit, but the way you build good credit, right? And it's important that you basically um, utilize and don't use more than 30%, right, of your credit limit. Means that if you have $1,000, right, on your credit limit, you might want to just spend $300 on that. So 30% of your credit limit. By doing that, it's going to help you reducing debt. So next slide, please. So good credit management is important, very important, because when you have a good FICO score, right? And so when you actually have a good FICO score, 750 and above, that means you'll be able to save interest and late fees, right? So, and you'll be able to save with healthy credit score as well. Remember, the ultimate goal is you want to make sure you want to reach your financial security. When you have a good credit score and you have a good FICO score, means that you will be able to save on anything that you purchase, whether you want to buy a home, whether you want to build good credit, and so forth. So next, please. So plan to reduce debt, right? Getting out of debt is the number 3 goal savers select when they place to save. So large consumer debt can keep you from saving and building good wealth. Okay. Plan and discipline and patience can help you reduce and start your own path to accumulating wealth. So the bottom line is it's important to reduce in debt because that's going to help you save for your financial future. Next, please. So take that Los Angeles page, LA Saves page, and this is why I want each of you guys to really take your phones out, get your computers, whatever ways you want to do it. I want you guys to take the place right now, okay? So the first thing you want to do is you want to set a goal. I'm saving for what? What do you want to save for? Whether you want to save to, save for emergencies, you want to save to take a vacation, or simply just you want to save to for retirement. So make a plan. So tell us how much you want to save for. Is it for 12 months, 30, 36 months, whatever you want to save for, you can select for 12 months and so forth. And what I want you to do is you're going to give us your email address, your phone number, your zip code. And basically, once you sign up to take the pledge, we're going to send you reminders how to save money. And you're going to get reminders. You're also going to get quarterly newsletters, right? So what you want to save for. So get your phone out. We're going to take the LSA's place so you can start saving for your financial future. Next, please. Perfect. So this is a perfect example in reducing debt, right? So remember what I said before, saving, reducing debt is the number 3 goal that, savers select. So this is just a perfect example that you will say, I'm saving $160 for 12 months, and I'm saving to pay my credit card payments, or I'm saving to pay my debt, or I'm saving for to pay the car loans and things like that, right? So next, please. So do you need to open a bank account? Get Bank. So this is one of the local initiatives that FDIC is putting together, and really to support the underserved and underbanked or low-income families to really help save money, right? So because remember, open your first bank account is the most important steps you can take toward reaching your financial goal. Why? Because putting your money in FDIC insured bank can really help you achieve your financial goals, and it's really safety, easy to access your funds, saving from checking fees, and overall your financial future. Keep in mind, if someone don't have a bank account, they will be paying fees rather than just open a bank account that can help them, with their financial future. So next, please. So these are banks participating in a bank-owned, low-cost accounts. So the FDIC partnered up with the bank-owned LA County to really promote savings accounts, low-cost maintenance fees. And just keeping in mind, when you actually logged into your to the link, you will be able to see banks that are part of the FDIC, but also that are offer low cost savings and checking accounts. So please go ahead and click on the link. And I want you guys to take that first step in building your financial future. So next, please. So these are the resources, some of the resources you can actually go online. And Cheryl, they mentioned about annualcreditreport.com, and it's free that you can pull your credit report. And in fact, before the end of the year, you can actually pull your credit report once a week, totally free at no charge. And these are some of the other resources, lasafe.org. And please go ahead and take the page, lasafe.org, and start saving for your financial future. Next, please. I want to thank you guys for being part of this. We look forward to working together. And I want to thank Cheryl, Rihanna, and Lisa for being part of this America Saves Week. Thank you. So this is the additional resources that you can also look into it. Annualcreditreport.com, lasafe.org. You can learn more about the campaign, lasafe.org.
Here I am talking and I'm still muted. So thank you, Jose. So we are close to the hour and I see only a few questions. So there is one that I'm going to read out. I'm going to, and I'm not going to add the other presenters just yet. So let me just show you the question. And it does say, how do I get a free copy of my credit report? And as Jose just pointed out, it's one here, the resources, it's obtaining your free credit report. So again, if you guys need to get one for free, that's basically where you go and you can access your information. All right, so let's see. Another thing, I'm going to bring in one of our presenters. I don't know if anybody can answer this question. Maybe you can add Jose, I'm not sure. So I've added Rihanna. I'll add also Cheryl, only because I think this is an important question that I don't know if it's been asked yet. I don't remember if we mentioned it during the presentation, but student loans, are those reported on your credit report? Yes. Yes. So I see yes from all presenters, which is perfect because I know that's a topic that's going to be coming up soon, since you guys are going to have to start making payments in October, unless of course the loan forgiveness thing goes through, or it already did. I haven't kept up yet. So that was one of the questions I was just curious about. And the other thing is, based on what's going on, here's the other question. How many copies of my report can I get before it impacts my credit rating? Who wants to answer that?
I'll take that one.
Okay.
So when talking about credit inquiries, there's three different kinds. One is the hard inquiry, and that's when you apply for credit. And in that application process, they pull your full credit report. We refer to that as a hard inquiry. And that's what affects your credit score, and that will live on your credit report for 2 years. Then on your credit report, you will see an area called soft inquiries. And those are for marketing purposes or creditors that you already have relationships with, that they periodically monitor your credit reports to see if they want to increase your credit limit or decrease your credit limit. And then you pulling your own credit reports does not show on your credit report for anyone else, and it does not affect your credit score. So you can pull your credit report every week right now through at least the end of December, and it has no effect on your credit report.
Okay, that's great to know. All right, so I think we're already towards the end. And I do have a few things for the library. For those of you who are following our schedule, of course, this is financial planning month. So we also have other programs online and the LA Saves at local branches. So please check our calendar. Let me put that up here for you guys so you can see it. And here we go. It's at lapl.org /financial-planning. And again, like I said, LSAs at our local branches. We also have, I believe, 2 other programs plus a financial advisor on Saturday that's coming up where you can meet with a financial advisor. So again, thank you, Rihanna, Cheryl, Jose, for today's program. If you were not able to attend this program from the beginning, it will be available on the library's YouTube page. So let me put that up so you guys can see it. And again, it's going to be here. The recording will be there for quite some time. So please go ahead and view it at your own leisure. And if you don't want to hear us at the beginning, you can always skip. So don't forget about that. So again, thank you everyone for joining us today and have a great afternoon.
Bye bye. Take care of yourself, Lisette.